Steve.
That's my name.
I've got some people on the market close that want to listen to you, and you are live right now. And well, they want to know how you were so right about Tesla.
Because they barely make any money.
I told them, they were like, what is Steve doing right now in this market? I'm like, he's doing two things. He's buying NVIDIA and he's bragging about Tesla. That's what Steve's doing right now.
Pretty much.
All right. So if you got 10 minutes, then we're just going to end out the show. What are you thinking on the worst day of 2025 in the markets?
If you're a long-term investor, you should be happy. If you're a trader, you should be scared. That's all there is to it. I keep saying this. Nobody that I know is selling the S&P. Everybody that I know that invests into a work-sponsored retirement plan is wishing that today was the 14th or the 15th, whenever the paycheck hits, because that means they're just buying more stocks at a cheaper price. I mean, look, I bought more NVIDIA this morning. I bought more Block this morning. I bought way more NVIDIA than I did Block. I bought both this morning. So I think they're both very undervalued. And just because we're going through a volatile period does not mean that companies like Alphabet or Amazon or Meta or NVIDIA or even Microsoft or Apple are going to miss their projected numbers in Q1, or they're going to have an off year this year. None of the estimates have changed. This is all feelings over the current administration trying to make a deal on tariffs and other things. This is all emotional. This has nothing to do with fundamentals.
Are you at all concerned that these tariffs are going to wipe us out to 2022 type of a year?
No.
Why?
And if they do, so be it. But they're not going to.
But why do you say that so confidently?
The Fed is going to cut at some point.
Okay, but let's say they cut and it's too late.
I don't believe that this is a situation where you get to June and the rates are the same that they've been. You have a March meeting. I think you definitely have a May and June. I don't know if we have an April meeting. I don't think they're going to cut this month. But if CPI comes in hot on Wednesday, the next meeting they're cutting.
Okay, I don't think they're so CPI needs to come in significantly lower for them to get a cut in March, which is not going to happen. The percent is 3%, right? Maybe there's a shot, but again, we've got to really either have an issue with the labor market or inflation meaningfully has to come down. I don't know if both of those happen by May.
Or maybe we just need a new Fed chair.
I mean, well, look,
or maybe we just need new Fed members that need to get it through their heads. It's not good for the economy to keep changing rates all the time. And maybe it's not good for the economy owing $1 trillion on the debt annually, and reducing the rates does allow us to refinance the debt and chop hundreds of billions off of the annual payments. In addition to creating an environment where businesses can invest onshore and compete. And that creates jobs. And if there is a demand for something, companies will figure out a way to deliver that service or that good because there's profits to be made. Eventually, it'll work itself out.
Look, I agree, but we're not getting a new Fed chair. We're not getting a new Federal Reserve. We're not abolishing the Fed. I mean, like, at the end of the day, if we're living in reality, this is going to be a game where J Powell is going to have to give in to what Trump wants. And I mean, we're all going to witness if he does.
They have a dual mandate, and I have always felt the side of jobs is way more important than stability in pricing, because you want maximum employment at all costs. I mean, I was just at a grocery store. Is anybody not buying groceries because they have to pay $104 instead of $103? No, everybody's still buying groceries. We should want and celebrate maximum employment. And you get that by having a business environment that is inclusive of business.
What is your opinion on Tesla, and when do you get ready to buy?
125.
Hold on. I think you said 200 last week. Now it's 125.
I was being nice.
Oh my
At
gosh.
200.
Okay, but realistically, why do you think 125 or 150, whatever is possible?
They're I mean, wherever the market cap is now, what is it now? 700,
Yeah.
700. Okay, so $700 billion company. Pull up their financials. What are they generating net income in 2024? $7.5 billion.
I will give you the exact number. I think it's a little bit above that, but basically, yeah.
8 billion
in 22. Yeah, 8 billion.
Trading 100 times their profit.
Yeah, I mean,
100 times. What did Alphabet do? 100 billion. What's their market cap now? 2 trillion. They're trading at 20 times their profit.
So what you think this thing is going to? You think it's realistically getting cut in half?
Another Costco situation.
Yeah, but Costco doesn't have FSD or robotics.
Who needed as Tesla right now?
That's a good point. Right now, you're right. Now,
I'm not saying that they won't over the summer or they won't next year, but this is a situation where they need to come through on these products in order for the market to trust that they're going to be able to generate revenue and profitability from it. Otherwise, I don't know what happens, but I don't think that it's anywhere close to being fairly valued right now.
So
they're a company that's not growing. They're not really that profitable, and they've been thrown into the Magnificent Seven name without generating the profits that the Mag 7 generates.
Elon, we just watched a Fox Business interview with Elon, and they asked him what is Doge having in terms of an impact on his other companies, and Elon said one sentence, and he kind of was like stuttering through it, and he said it's very difficult, but I'm just trying to make the government more efficient. What is your take on that as a shareholder?
As a shareholder of any of his companies, you should be shocked. I gotta take this call, though. I'll call you back.
Okay, cool. 125 now for Mr. Stephen Fiorillo. 125 is his new target. I mean, look, he's right about the fact that, yes, Tesla does not have robotics or FSD at the moment. And look, when it's not the same thing with Bitcoin, right? We talked about it last night. Like once people get scared, they stop caring about their thesis because their thesis starts to go away when they need cash, right? So you stop caring about Bitcoin and how important it is as like a hedge against money printing, yada, yada, yada. When there's no revenue, there's no earnings, and you think it's super volatile, which is kind of how Tesla's priced right now, right? You sell. You get scared and you sell. And I guess we're going to see if Tesla continues to make it seem like, oh, Steve's calling me right now. If Tesla's going to continue to make it seem like there is nothing that people can look forward to currently right now. Yeah, you're back.
Yeah, my wife called me. Yeah, I think that any shareholder of his company should be shook right now because I don't know what the long-term damage that he's doing to his brands are. I really don't. I don't think SpaceX needs to worry, but Tesla, I don't know what the long-term damage is. I really don't.
Do you think Tesla can get to 125, but the S&P can get to 7,000? Is that possible?
Absolutely.
Why?
The S&P does not. Tesla's one company. The S&P does not need Tesla to rally to go up. Tesla can keep going down, and S&P can easily rally. I mean, what's the weighting right now? They're the 8th largest company in S&P, something like that, 1.5%.
Yeah, basically.
Okay. Apple, NVIDIA, and Microsoft make up like 20% of S&P. They are way more important than Tesla.
Yeah, but I just think it's kind of like a rising tide lifts all boats. If the S&P does rally, I feel like Tesla rallies with it, right?
If it does, great. If it doesn't, I don't think it matters. The question was, does Tesla need to rally for the S&P to get to 7,000? No, it doesn't. Tesla can go down, and S&P can still get there.
Do you? So what are you doing with are you just selling calls against your Tesla stock? How are you navigating this?
I mean, I got calls that were open until September because I had to roll them, and now they're looking pretty damn good.
Well, what strike? They were like, what, 170, 180?
260.
Oh, you're good.
Oh yeah.
I mean, you're very good right now.
I told you I was not flinching on any of this stuff. I didn't flinch on Palantir, didn't flinch on Tesla. Don't care.
Well, Palantir, you're not good yet. That one,
We're gonna be.
You haven't won that battle yet, but
We're gonna be.
Tesla, you are good on. Yeah, Palantir was down 10% on the day, so Palantir got hit as well today.
I just don't see how this is a dip that doesn't get bought. I mean, maybe it keeps going lower, but ultimately, this time next year, this is going to seem like a missed opportunity for a lot of people.
So you think a year from now we are much higher?
Yes. Nothing changed in the numbers. These companies are generating the most profit out of any period in history. And it's expected to get bigger. We haven't even felt the effects of generative AI. We haven't felt the effects of anything yet. So people selling because of headlines or feelings are crazy. I mean, unless there's a scare of profitability, I just can't see why you would want to sell. I mean, are you not bullish on the American economy?
Yeah, I mean, look, I think a lot of the things that people have been saying as well today, some of the sell side I've been reading, is that they're adjusting their end of year targets, maybe reducing it by 1 or 2%, but they're not saying go into cash. You know, they're saying that it's going to be choppy with the tariff volatility, but it's not going to be get the hell out. This is 2008.
Once again, where else do you put money? There's nowhere else to put money unless you're going to start buying up laundromats and small businesses and build a portfolio like Cody Sanchez, unless you're going to take that method, or you're going to test your hand in real estate, which most people are not going to do. There's nowhere else to put money.
Yeah, I mean, look, you have to work really hard. With NVIDIA, you can let Jensen do all the work. If you want to start a laundromat, you got to put in some work, right? It's not easy to just make it profitable. So, Steve, you lived through 2008. Does this feel like 2008 to you?
No, not at all.
Why?
So, without saying the area, I will tell you that driving through one of the wealthiest zip codes in the country, I've never seen how, like, every third or fourth house for sale. Never seen that before in my life.
Right now, that's what you're seeing?
No, in 08.
Oh, in 08. Okay.
Don't see that now. It's like no inventory on the market where I am.
You know, so in 2025, you're not seeing some subprime bubble that could collapse everything or anything.
Yeah, I saw that freaking thing pop into my algorithm also, and I laughed. I'm not refused to click on it.
Yeah, for those that haven't seen, there is a video going viral about some dude who thinks he found the next subprime mortgage bubble. We should watch it together and analyze it.
I mean, we can react to it if you want tonight, later.
We can't do tonight. We should I have Hood Weekly tonight. Well, we'll find a time. We'll react to it this week.
Do it after. Hood Weekly is what time? 9?
No, it ends at 10:30. But yeah, we'll find a time to do it.
We'll figure it out. But yeah, we should react to it. I'm not seeing it. In order for that to happen, you need a significant loss of jobs and a significant amount of delinquent payments. I don't think we're anywhere close to that. Now, I don't think that my fears are unwarranted about labor in the next 10 to 20 years, but I don't think that it happens overnight.
Yeah, I agree. I mean, it's worth reacting to, and we'll probably do a stream and take a look at it. But I mean, could you?
And here's the other thing: people are still buying houses in cash.
Yes.
And there's no inventory on the market. I mean, we were looking at something, just and not really looking, but next thing you know, it's gone. Not on the market anymore, sold. I mean, you're still getting a lot of high prices for homes.
Yeah, I mean, look, if Trump has to deal with a 2008 type of a bubble, I mean, that would be insane, and that would be a death blow. But I agree with you. I don't think it's necessarily as easy, but everyone wants to be the guy who's calling it, right? Because they get all the publicity and notoriety and all that stuff. So that is fair. Someone asked, do you like Meta at 500 or Amazon at 193 if you had to pick one.
No, that's a hard.
Or sorry, Meta's at 597, not 500. So Meta at 597, Amazon 195.
I like both. I think Meta's a little bit more undervalued, but I think Amazon has more upside potential, which is kind of a cop-out answer. But I think from the if you're looking 5-10 years out, I think Amazon is going to be one of the best buys you can get into.
I'm going to do a poll right now, but you think Amazon at 195 is better than Meta at 600?
If you're talking 5 to 10 years, I would say Amazon. If you're talking 1 year, I'd say Meta.
I think that's fair.
Even 1 to 3, I'd say Meta.
The only problem,
both phenomenal companies.
The only problem I have with Amazon is if Trump really does institute the tariffs, I think Amazon gets hit the worst. Right? Like,
I don't think so.
No, they do. They 95% of the shit they sell is from China. Right? Like
I wouldn't be worried about it.
If we actually have serious tariffs, I think that would be an issue for Amazon. Because they're going to pass the cost on to the consumer, and people are not going to want to pay an extra $5 per water bottle, you know?
I think that's where you're wrong. I don't see that people aren't going to just stop spending money.
And you think that's how Amazon becomes recession-proof?
Are people going to stop going to Walmart?
No, but
I think people are going to buy on Amazon because now they're not going to want to spend the money to drive and waste their time going to the store.
Yeah, but in aggregate, sales will slow down. Like, it's not like sales are not going to just go through the roof.
There's a difference between slowing down and reversing.
I mean, it depends. Yeah, it depends on how bad the recession is, or how bad the tariffs are, right? But I get the point.
A lot of variables, a lot of unknowns. Right now, I'm not worried. I think it's annoying seeing the market down like this, but this is why I always say dry powder. Have something put on the side for opportunities. This is an opportunity, in my opinion. And it could get lower. It could continue to go lower. But that's why I don't try to predict bottoms, because I don't know if NVIDIA is stopping here or at 95 or at 85. I have no clue. But every day it goes down, it just gets cheaper. And nobody's worried about them not producing.
You know what I actually am worried about? I was looking at private market valuations of secondary stocks, or secondary shares. They're going down, bro. They're going down. Like,
yeah, rightfully so.
Private market companies are, I mean, if the public markets can't support these valuations, neither can private markets. So the point I'm trying to make is, I don't know if Discord gets the valuation they want.
But once again, those are much smaller companies. You know, companies that you and I are talking about are the largest companies in the market. And people are selling, and here's where it gets me. People are selling off the biggest cash cows, the companies with the biggest balance sheets and the companies with the most profitability. And they still want to look for these little companies that could potentially do something. It's a crazy way of thinking.
Yeah, I agree. It's just, if M&A and IPO were the bull case for financials this year, I really wonder if some of these startups are actually, like, would Stripe even want to go public in this market and deal with quarterly reports? Like, I feel like they'd rather stay private. Same thing with Discord and Anduril.
If they don't need the money, there's no reason for them to go public.
Yeah, no, I agree. There's no reason.
It's like PayPal. PayPal should take themselves private.
Yeah, like if Discord went public today, who's excited to buy Discord when your freaking NVIDIA's down 30%? Like, you're not excited to take a portion of your portfolio and say, yeah, I'm going to take a chance on Discord today. Like, that appetite is gone if we continue to be within this sentiment.
And I also think there's a lot of leverage. There's too much leverage. There's too many people trading on margin. There's too many people buying 2 and 3x levered ETFs. And there's too many people speculating on options. There's just too much out there.
Dude,
and I think that needs to get shaken out.
There was a freaking Robinhood leverage 2x ETF freaking down 40% today. And yeah, like, of course it is. This is why you don't touch this type of stuff. Like, this is just, it's aggressive, bro. This thing almost got to $1 billion in AUM. Like, this is shit you stay away from.
Which is crazy.
NVDL is the single largest single stock ETF. That thing has 5.7 billion AUM. That's down 10% today as well. Like, I agree with you. That is the definition of froth. I think we lost him. Oh, there you are. Yeah, you're good. Oh, no, we lost him. Yeah, let me call him again. Tariffs. I'm blaming tariffs for everything. I'm blaming tariffs for everything. Okay, his phone's being weird. But yeah, dude, these single stock ETFs have been just disgusting all year. And for everyone who asked why wasn't I buying Robin, it was for this reason. It was like, well, if you get a lot of volatility to the downside, or even if Robinhood's flat, that thing can dry up real quick. Same thing with PITRI, which is the 2x leverage Palantir ETF, NVDL. I mean, a lot of these just got hit pretty bad. Let me call him again. Let's see if this works. Yeah, you're back. Your phone got hit with the tariffs, I think.
Yeah, it could have been.
But yeah, you were just talking about froth in the markets.
Yeah, I just think long-term investors aren't worried. Like, no, I don't think anybody is selling their 401ks or long-term investments.
Yeah, I mean, look, another thing that I've felt uncomfortable about for a long time has been this meme coin nonsense. Like fart coin reaching $1 billion market cap. Like that only happens when there's so much excess liquidity, because no one should be investing in fart coin over NVIDIA, right? Or Meta.
Agreed.
So if that gets wiped out because we have a good old-fashioned correction, is that the worst in the world?
No.
It's not the worst thing ever. It's not.
Look, those things are the equivalent of penny stocks.
Oh, 100%. 100%. The equivalent to penny stocks. I agree. Completely agree. All right, Steve. Thank you.
I just don't think that it's worth worrying over this at all. I really don't.
Well, I mean, people are going to worry because, look, for the people that
I have a crazy idea. How about this? People should learn how to go read financial statements and invest in quality assets. How about that?
That's fine. My point is, if you're watching a market open live stream, if you watch CNBC, whatever, you are glued to your portfolio, right? And inevitably, it's human nature, right? You're going to see the red, and it's going to suck. It is what it is, right? So I think people can try to avoid it mentally, but at the end of the day, if you know your net worth's getting hit, it is what it is.
Look at the chart of the S&P and look at a 5-year chart. Take the pandemic out of it because we're almost right now near where the pandemic bottom. So it's actually a good 5-year chart to look at. You've had many pullbacks over the past 5 years.
Yeah.
And forget the crash of 2022. You've had retracements at 500 points before and 1,000 points before, and then the market just turns. You had the Russia-Ukraine war start. You had supply chain issues. You had inflation. You had the Fed increasing rates. There's been many pullbacks, and it's always the same reaction. Short-term money gets scared. Long-term money buys.
Do you think there's any bear case that derails like a 10%, 15% gain in the S&P this year? Like a meaningful bear case, not just tariffs, but something that...
The only bear case is if whatever's happening makes guidance for companies come down and they miss targets that impact their growth rate significantly.
Okay, well, I do have to tell you something. I didn't give you this news. After hours, Delta's down 14%. They lowered guidance for Q1.
Who cares?
Okay, I don't think you can ignore that. And JetBlue's down, United Airlines down, Carnival Cruise is down, American Airlines is down, Southwest is down, because if they think people aren't going to travel as much, that is an argument around the consumer weakening, right? I don't think we can ignore that.
So is Delta lowering guidance, or did the stock just get whacked?
No, they lowered guidance from 7 to 9% revenue growth in Q1 to 3 to 4%.
Oh no, 7 to 9%. Did they reduce it from 9 to 7%?
No, from basically 7 to 4%, essentially.
So it went from 7% to now 4%.
Correct.
Oh no, they're still growing.
I get it, but I also think it's, it's not like that's the bear case for the economy, but...
And it's Delta.
Yeah, but Delta, whether you like Delta Airlines or not, it's emblematic of every
but I'm saying
consumer.
it because there's a lot of other ways to travel. And don't forget, a lot of businesses are doing less business travel. Remember that.
Yeah, but Steve, look, I agree with you, but I don't. They cut their guidance by 50%, basically 45%, whatever. And then every other airline is down basically 7 to 8% after hours. Delta's getting hit the worst. If United comes out and says the same thing, that's not something we can ignore, right?
So there could be many reasons why them and potentially other airlines decrease guidance. The fact is that they're still projecting revenue growth.
Correct.
And
correct.
That still means you have an economy that is growing. Even if they were flat, you could still make the argument that people are just either not traveling as much for business, not traveling as much for work, families aren't going on as many vacations, whatever it is. But that doesn't impact companies like Amazon or Microsoft.
So every time you say that, I get what you're saying, but if Delta's not selling as many airlines, they're not going to be advertising as much on Meta. That's always the connection I come to, which is what affects Meta, right? Like, it does affect the Max 7 in some capacity. They're going to weather the storm. Meta's not going anywhere.
What's their ticker? DAL? Pull up their income statement. Tell me what their operating expenses are.
Steve, we don't have to go through all that. My point is a more macro.
Just tell me what their operating expenses are.
If they are lowering their guide, it doesn't matter what their operating expenses are. If they're
Of course it does. If you want to make an analogy like that, of course it does. Tell me what they spend on their OpEx.
Okay, I will bring that up for you, but my analogy is 1,000% accurate. Companies will not advertise as much if they're not getting that much demand for their product. Like that's not even debatable. I don't care if they spend 0.4% of their budget on marketing. Like that will decline. See, look at you. I told you road rage.
No, people need to learn how to drive.
Okay, operating expenses for on a trailing 12 months. Mm-hmm. Selling in general was 2.4 billion. Mm-hmm. Other was so 7.4 billion in total.
Yeah, but that 7.4 billion, that does not include cost of goods, correct?
That does not include cost of goods, correct?
Okay. Maybe their advertising budget's $1 billion or $2 billion of that. I have no idea. It's not going to matter for Alphabet and Meta.
No, but it's not about it mattering.
That's one of the last things that goes. They'll do a riff first or try to create streamline efficiencies before they lower their advertising budgets.
But it's not about Delta in particular. It's every company at once saying, wait a second, we aren't getting as many people to buy our shit, which means we can't keep paying Meta and Google as much money.
We are nowhere close to seeing that happen.
No, I agree. Not yet. I'm just saying, as an example, Meta's valuation gets compressed if we see a slowdown in the economy. Meta is not immune to the fact that advertisers will simply stop advertising as much if they have a lack of demand for the product.
So when I get home, I'm gonna pull up one of the charts that I track on Alphabet, because I actually don't think, if I remember correctly, that their search revenue, which is advertising, went down during the last recessionary period in Q1, Q2, 2022.
I think you're going to be right about that. It didn't go down as aggressively as most people, but the point is the multiple compressed. That's my point.
Okay, and it can compress for a little bit, but ultimately it's going to expand.
Well, yeah, hopefully over the long term, but I'm just saying, if there is, I'm agreeing with you. If you start seeing companies lower guidance, which is what Delta did today, and we see that as a trend, yeah, I do think that is something we have to pay attention to.
You know what? Buy utilities.
Well, see, I'm not buying utilities.
and you know what? Guess what was up today? There were some companies that were up today, like Realty Income and stuff like that.
Look, my point is, if Meta does get hit because of an advertising "quote unquote" recession, I would buy that dip any day of the week. But I just want to
they're getting hit right now.
I just want to make the point that if it really does come to the fact that Delta is lowering demand, that does have an impact on Meta. Meta is not going to be immune to that. Neither is Amazon. Neither is freaking Google. Neither is Microsoft. Neither is Apple. Like all of them get hit.
Immune. They won't be immune, but their numbers may not go down the way everyone else's does. And likely they're still going to expand.
That I agree with. But I think the value, like Apple's not going to be trading at a 35 PE if we have a slowdown. There's just no way in hell. I mean, like, are you buying Apple right here?
I mean, I am not buying Apple here, but I wouldn't be opposed to buying it if it sells off a little bit more. There's other companies I like way more than that. It's hard for me to buy anything except for NVIDIA right now.
You see that as the cheapest stock in the market right now.
It is so disgustingly cheap. It is just, if NVIDIA was trading at 170, I'd be buying a lot of other things. NVIDIA here, there's nowhere else for me to put money.
Yeah, look.
Except Black, because I want a dollar cost average on it.
Look, you got your chance to buy a hoodie at 35, Steve.
No, I don't care about it.
You got a chance to buy a hoodie at 35. Bro.
It's trading at less. Think about this: trading at less than 20 times earnings with 50% revenue and 50% EPS growth. You're not getting a deal like that in the market from anywhere.
Robin is trading at 25 times earnings with more growth, with $5 billion in cash. I mean, it's.
Did you just say more growth?
Yeah, Robinhood's growing 40%, or they grew 115% last quarter. What do you mean? They're growing way quicker than Blue.
No, I'm not talking about a quarter. This year, what is their revenue and EPS growth supposed to be? I know what their EPS growth is. It's not good.
That's because you're going through the analyst projections. If they hit the numbers that I think they can hit, if we get out of this kind of bear market period, they're going to go minimum 30%.
Okay, which is great. But it's not, I believe the number for NVIDIA on the analyst projections is 56%.
No, I'm not talking about NVIDIA. I'm talking about Block compared to Block.
I get that. I'm just saying that you're not getting a deal like NVIDIA anywhere in the market.
I agree. Last quick.
It's trading at such a low valuation that it's crazy that people are not buying this hand over fist. Which is good for me because I'm buying more better valuations.
Okay, so last quick thing for you. Marjorie Taylor Greene bought the following stocks, and I want to get your reaction to that.
CrowdStrike, I saw the headline come through. CrowdStrike and some other stuff, right?
Let me say for the audience. So Dollar General, Goldman Sachs, iBit, Tesla, and CrowdStrike. What are your thoughts?
I like the Goldman Sachs play. I mean, I've been saying that they're super undervalued since sometime last year.
That's it? You don't like the other ones?
I mean, CrowdStrike's interesting. I mean, there's a lot of high-quality cybersecurity names, but when it comes to investment banking, Goldman and Morgan Stanley are the two you want to be in.
What do you think of this Bitcoin strategic reserve?
Don't care.
You have no opinion on if it's good or bad or anything, or just
no? It does not interest me at all.
Yeah, I think a lot of people were kind of disappointed by it, so it's fair.
I mean, if you're pro crypto, then you should be excited for it. But I'm just not into the whole Bitcoin thing.
All right, that I guess that's it for today. So takeaway is buy NVIDIA hand over fist, or at least that's what you're doing, and wait for Tesla to fall even more.
I don't see how Tesla doesn't keep falling, and I think NVIDIA is getting so cheap. I mean, you just look at the projections. They haven't missed what Jensen has said. They have not missed in God knows how long. At his current margins, at his current forecast for Q1, they're going to do more profit in 3 months than most companies in S&P do in a full year. And when you look at the projections for revenue, they're supposed to do around $204 billion this year. And even if you drop their profit margin down from 56% to 50%, you're talking about $102 billion profit. Pretty good deal right now.
You're not wrong. No, you're right. You're right. All right, last question for you. You think they take NVIDIA below 100 or no?
I mean, it happened last year, didn't it?
Yeah, I mean, I think they want to take it there. I think it's fighting for its life. But
yeah. Look, and if they do, it's going to be short-lived. Who cares?
Tesla down another 1% after hours.
I don't know why you're shocked at that.
I'm not shocked. I'm just, I'm kind of, well, actually, when seeing it below 230 today was surprising. I didn't expect that. I agree. That got me. But
I don't know why you're shocked. It's a numbers game. They're still trading at a ridiculous valuation with no proof that they're going to monetize FSD or Optimus. That's just those are the facts.
All right. Thank you, Steve. Appreciate it. We'll talk to you later throughout the week. I'm putting Steve's Twitter right here in the chat and his Seeking Alpha as well. You guys can. What companies are you writing about this week?
I haven't decided yet. I don't know.
You did NVIDIA and SoFi last week, so if you guys want to check out those articles,
maybe I'll do something on Palantir.
I think you should do something on Palantir and Tesla, bro. Give us some juice on those companies.
Maybe I will. Maybe I'll do Tesla and Palantir this week.
That'll be good. People would like it. All right, Steve. Thank you. Talk to you later.
All right.